Okay, everyone. Hope you're all having a good day. Apex Trades. Hopefully I'm streaming. I'm just going to check just while I wait. Just let me check that this is going live and you guys can see me okay, or at least you can see the screen. Let me just check. Yep, looks good. I can't see comments though, so let me just put that on my phone just in case anyone wants to comment. Okay, so interesting day in the charts. Wow. First and foremost, we've got to just have a quick check on what happened today in the typical news on the Fed. So look, what we saw today was ADP non-farm employment change. I mean, this is to say how many people or how many employment changes, as in more jobs or less jobs, have people been removed from jobs, all that kind of stuff. You know, in the previous month, we had 182,000 in terms of jobs, right, and new jobs into the system. They anticipated a reduction, which would have been good for the Fed because that's effectively what they're looking for. They want to see, you know, a lessening of these jobs. It came in at 235k. That's nearly 80,000 more non-farm employment changes than they anticipated, which is crazy. And then what was the other news? Unemployment claims. How many people are claiming benefits for being unemployed? Well, again, they anticipated because the Fed is starting to go, you know, reduce and go down in terms of the economy starting to tighten, or so they would imagine. They anticipated that there'd be more people claiming unemployment, but in fact it was less. So a double blow for the Fed, which is like, wow, okay. So what does that mean? Well, what it means is, unfortunately, more of what happens in 2022, continuation of rate increases, more pain, more running to less risk assets like things like yields and currency, and more downward turn for riskier assets like stocks, shares, you know, BTC as an example. This is what we expect to see. So it wasn't good for the Fed, that's for sure. Now, what's today about? So right, today is about day trading. So if you're in our server, you'll know, Discord server that is, you'll know typically we do a lot of kind of swing trading where we'll hold a trade for 1, 2, 3 days, maybe as much as a week. Just depends on how things are. But oftentimes, if there's a little bit of degen blood in you, we just like to kind of do some day trades as well. So what this is really is more of a day trading session. It's 3 o'clock just gone, which means that we've just got over the brink session, and now the fun really starts to happen. You can see the volume already starting to spike up here. Right now, what we're looking at is my Bybit account. I have my main account as my swing account, which is where the majority of my funding is. But what I really like about Bybit is you can create a sub account, which means that any transferring of money into that sub account means that whatever's in that sub account is really what you're exposed to. So that's going to be the maximum risk that I would expect to lose, you know, if that was the case, rather than, you know, blowing up an account because you know, done something stupid like maybe you're in hedge mode accidentally where you have multiple orders open, and or maybe you're in, like, I don't know, you've got a cross margin where anything within that account is effectively on the hook for margin creep. So always a safe bet is to create a separate apologies for my voice as well, by the way. Create a separate account which then allows you to just put in whatever funds you're happy and willing to lose. So what I've done is I've got $250 in the account there. You can just see on this in the right hand side here. I just want to talk before we dive in and think about trading and a game plan for the day. I want to just talk a little bit about leverage. I'll be using high leverage on this one, and there's kind of a reason why. As I say, number one, I'm okay to lose the money, but number two is because you can do quite well with high leverage margin as long as you know what you're doing. But we are going to just talk a little bit about that, right? So we've got cross here at the top right hand side. We've got cross mode, and we've got isolated. Depends on your trading style. I mean, I typically can go isolated if I'm going to put the whole lot on the account. However, if I want to average into my trades, then I'll use cross margin. So I will actually use cross margin for this session, just because I want to kind of go over some ideas. So I'm just going to click OK at this moment in time. No changes have been applied. That's fine. If I start by just saying, let's say 100%. So right now we've got $250, as I just said. Let's say we always counter trend. The way I like to trade, by the way, is to counter trend. I don't like going with the trend. I like to counter trend. That means not waiting for the breakout and then trying to dive into that breakout, because the way markets like to move, the way markets get manipulated, I don't really like to do that. For me, it's always trying to get on the trying to catch, a reversal, let's just say. And there's ways in which we can do that, and we're going to talk all about that. So yeah, so let's talk about leverage. So if I on cross margin up here and 10x leverage, right? Because I'm in hedge mode, right? So you'll see this here. You can either have hedge mode or one-way mode. Under one-way mode, you can hold either a long or a short. But the moment that short crosses the long, if you've got a long and a short position in your platform, it will effectively counteract that that order. So it almost becomes like a take profit or a stop loss, if that makes sense. In hedge mode, you can do both longs and shorts, and that's what mode I'm going to be using, which is why it shows you here. Let me just click X on that. Why it shows you that we have both a 10 year and also a 10 year. That's a 10x leverage on the long side and a 10x leverage on the short side. So first things first, right? We have to. I'm not good. This isn't the platform I'm going to use, by the way, for analysis. I'm going to be using. Let me just show you what the setup looks like just before we dive in, and how we can kind of refine what we're looking at. If I just go into this, so this is essentially what we're going to be using for analysis, right? So we've got TradingView here with some indicators that I kind of like to use, and then we've got Bookmap over here, which gives us a kind of a live snapshot of the order book. So what's going on currently on Bybit? That's what we're trading with. Where are the big market orders? Where's the volume weighted average price and stuff like that. So that's what we're going to be using in terms of being able to identify our entries and exits. But for now, as I say, I just want to get back into the platform that I'm trading with. So as I say, Bookmap and TradingView for analysis, but we'll be using Bybit specifically for the orders to be placed. Okay. So yeah, just want to talk a bit about leverage before we get things kicked off. So I'm trading with $250 right now. If I let's say a 17k, right? I'm just going to put 17,000. So that's to say I want a short as a limit order at 17,000, and you'll see, somewhere around here we'll get a dotted line in a second. If I want to trade with 100% of my total fee, right, at 10x leverage, that's to say my $250 becomes $2,500. So you start to see what 10x leverage does. Now that doesn't mean that I have to use the total $2,500 in one order. I could split that up into multiple orders if I wanted to. It's just trying to get your head around how leverage works. A lot of people just go, I can 100x, therefore I'm going to put an entry in for an 100x, and what does that mean? Well, this is what we'll kind of go over. So at 17k, if I just do a 10%, 100% of that 10x leverage, I open a short, you'll see let me just try that again. You'll see my liquidation level is at 18,627. So I'm just gonna put confirm. Okay, that's my entry, right? And the liquidation level was something around 18,6 something. So I'm just going to show you what that looks like in terms of the risk profile on that. Somewhere around 18. Let's delete that one. I think it was like 18,605 something. 605. Right, that would be where I would be liquidated. That would be where I entered my short. This is where I'd be liquidated. Okay, so let's cancel this out. What happens if I was to do a same leverage, sorry, a different leverage. So I was, let's say I want to put my leverage at 50x. So now what does that mean? Well, it means my buying power, right? So if I do 100% again, for that $250, right, at 5x, sorry, at 50x rather, my buying power has significantly gone up. It means now the value of my short would be well 0.145 BTC, so almost, well, a tenth of a Bitcoin. That doesn't feel right. Hang on, let me just double check that. Ah, my bad. I opened it wrong. Let me just double check that. Cross 50x. Sorry, I've done it all wrong. Okay, that's what we'll do. Let me just put that back to 10. This is just important information to go over, just so people understand the leverage side of it. And there may be people who understand the leverage anyway, but still, it's something that if you don't, you can get wrecked pretty quick. So, as I say, at 17k now, with still that same $250, but at 50x leverage, the buying power I have now is essentially $11,000 or nearly $12,000. You can see there, that's my buying power, right? So if I put a short order on here, what this effectively means is that my new liquidation level is now 17,265. If I confirm that and I bring this down to 17,265, you see that my liquidation level has significantly dropped. Now, what this essentially means is if the price, let's say the price here goes up, gets filled, comes back down, and then continues to go up, the moment I hit this, that $250 is completely gone. It wipes out my account. That's to say now that, I've been liquidated, and that's it. It is what it is. We accept it, and then that's the difficulty you got to deal with when you get liquidated, right? But lastly, we'll just do this at a 100x, right? So I'm just going to cancel that order again, confirm. I'm going to change my leverage. The reason I'm doing this is because I'm going to be trading with an 100x leverage effectively, right? So new leverage position 100%. Now for that $250, my leverage position, which was 100x, is to the equivalent value of 22,304. Takes some sort of fee for kind of just trading fees and things like that, which is why it's not quite 25k in terms of your 100x, but it's equivalent to 1.312 Bitcoin at 17k again. If I do and open a short, you'll see significantly less again. It's about 85 basis points from the price. So if I say, well, 95 basis points, if I click confirm, and I change this to 17,095, this is now my liquidation point. You can see the error becomes really, really tight, and that's the point that I would get liquidated. Of course, the opposite side of that is a lot more margin to play with, a lot higher in terms of value, but still, more risk involved. So that's just to be mindful of the kind of understanding of what margin means, and how liquidation levels work. But here's the really cool idea, right? Now, for that same, I'm just going to click X on this, for that same value, right? So I've got $22,000 to play with, let's just say, for my 250 equity. So I can now average my entries now, right? So I can say, okay, well, maybe, and this is where we'll start to look at a bit of analysis in a second. Maybe the idea is that I have a good gauge on where I think price is going to go, but I'm not entirely certain of where it will end up. So taking into account where my potential liquidation level might be, taking into account any kinds of wick that might come past a specific point because of I've analyzed the charts. That's what I need to be mindful of. Okay, so I'm going to be doing live trades. This is not financial advice, of course, by any stretch of the imagination. Why would it be? This is just me trading. I don't typically day trade. I typically like to trade normal kind of swing trades, which a lot more easier on the sleep, and yeah, you can get in. You can kind of relax a little bit on these kind of things. So let's move over now to the analysis piece. Okay. So first things first, let's just take a look at what we're dealing with here, right? So on the left hand side here, we've got Bookmap, and Bookmap is if you use isolated, don't you need a stop loss if you are happy? So Gainesville, if you use isolated, don't need a stop loss if you are happy to lose it. Yeah, that's absolutely right. Yeah, if you use isolated, but the problem with that is if you want to do multiple entries, you may get isolated on one or two rather than, you know, averaging up an order that you think might come off. There's drawbacks, there's pros and cons to both sides. Isolated is you could have one order where it just loses, and you might have four orders, but two of them orders you get liquidated on, two of them you don't because you're averaging in, but ultimately you've lost 50% of your account. Whereas if you put the same orders on a cross margin basis, let's just say, then realistically you can average in, but your liquidation level will move up as well, so you might not get liquidated. That's the double-edged sword basically. So if using Moonrise, if using 100x, would it make sense to use isolated? Yes, absolutely. However, here's the difference again. Just be mindful, because I'm in a sub account and I'm using cross. If I want to use cross margin, it's not going to affect any other sub account. So it's whatever I've got in. And like I say, I've got $250 that I'm happy to trade with, win, lose or draw. You know, for me, it's not. Of course, it's important to not lose money. The important thing is that you've got a plan. You can stick to a plan, and the plan has got merit. Sometimes plans don't always go to come to fruition. That's okay. That's just trading. Not everything is clear. But what you don't want to just do is randomly go in at price levels where you've got no real idea of why it's an important level or anything like that. And that's the biggest thing that you want to be able to take out of this. So all that being said, let's start with Bookmap. So we can see here right now we're in a traded range, right? And it's a nice range. You can see it's a nice range because we've got liquidity here up at the 16,900, and we've got some liquidity, well, down at 16,600. That's quite a far way off, but we're above VWAP, right, which is the volume weighted average price. So that tells me, if you're institutional or you're a hedge fund, that it's going to be, you are getting you're buying Bitcoin at a discounted rate here. Okay, so there's every chance that this is where big sells can come in because we're above the weighted average. That's the first thing I just is crossing my my mindset. We've got quite a decent size of Bitcoin as limit orders at this 16,900 level. So if I was to just mark that out here, 16,900. Now, is this just because it's a whole and a whole number, or is the significance around this area? Well, realistically, I don't see. We had a liquidity grab here. We had another kind of significant level here, but then we broke through it, but then came crashing back down again. So this is a significant level. You can tell it's a significant level. I'm just going to add in my daily and my VWAP lines just to see if we've got any more confluence around these areas. If you don't know what these are, then suggest you come over to our Discord server and we can talk all about that. But for right now, as I say, we're just, you've got a daily level just here. But right now, nothing else. I mean, that's a, we're in between two daily levels, so that's a significant area. So this would be an idea to start shorting from if we want to come up to this area. Now, anticipating what might be happening, you've got to look at where we are in terms of the money flow index. So we've just passed the heart line, so that tells us we've got more momentum to the upside. However, Longer term, we're in a downward trend again now. We've started to downtrend. So do we favour short-term longs or do we favour short-term shorts? For me personally, I would favour shorts over longs. So I would be looking at structure. I'm just going to take off these daily levels a second just because I think they get a little bit messy on the charts. So again, I'm just looking at structure. So higher high, next structure here. The key question is, do we break this structure? And if we break this structure, then theoretically we could start to see a push to the upside. If we don't break this structure, like that would have been a nice area to enter, because I think maybe on the longer time frame, yeah, you see. So this would be a higher high, lower high, another lower high here. So then, I think actually anywhere around this area would probably be good to get a signal in. You can see the trend strength is now starting to increase. So right now we're at 48% in this short trend strength, and we've got a 100% squeeze. So explosive move could be on the offering. However, you look at these, this Lux Algo oscillator here, we are starting to move to the upside. Obviously, we're on a longer time frame. So just these are the things that you've got to be mindful of. So let's see, where would we potentially look to enter a short? You might hear me being quiet for a second, I'm just analysing, by the way. This was such a difficult place to break through. I mean, the 17,800, this has held this line for quite some time. It's a really sticky area right now. Sometimes with day trading, you've just got to be patient. It's what I don't like about day trading, really, because I'm very impatient, if I'm completely honest. But sometimes you've just got to wait for an area to show its hand. I mean, I really like this 16,900 level, only because if you look at the 16,900 level, yes, it would break this structure, but actually, you could argue that if this was the start of a breakdown, this is a retest. I mean, if you take your Fibonacci retracement, I mean, it's hit the 0.5 absolutely spot on. Realistically, that wouldn't be. I mean, to be completely honest, I should have spotted that and got a short in. I think it already played out while I was waffling on before, to be honest. So as to why I've missed it, but just if you take the high and you go here, then it hasn't quite hit the 0.5. So I think that would be a nice area, even if we come up and tested the golden pocket. The golden pocket, incidentally, if you look right now, you've got this point here which we came into, we hit the low, and then the 0.5, sorry, the golden pocket, which is your 618 to 0.65 or 65%, it's right smack bang in the middle of that 16,900, and moreover, this is where we've got liquidity. So as boring as it would be, the sensible option and the sensible idea would be to commit our first order at this 16,900 level, right? So that's what we're going to go and do. We are now going to change. So let me just hop over to this real quick so we can show what we're going to do. So what I'm going to do, this is going to be left off. So remember, we've got buying power of on a 100x margin, yeah, so that gives us the power of 1.312, and I'm going to be doing these in 25% increments, right? So I'm going to say my first order is going to be just underneath, because I want to get filled, but just underneath that 16,900. So I'm going to do 16,895, 16,895. And I'm going to do 25%, which is just over a third of our bag. Now, if I do isolated margin and I've done that same 100%, let's just say, then realistically I could just use that. In fact, I'm flip-flopping a bit here, but I will do isolated margin, okay? But it gives me 4 entries, and because I am in hedge mode, I can save that entry as well. Okay, so let's open a short, which is just over 5.5k. Liquidation would be 16,979. 16,979. So where's my entry would be? See, here's the other thing you've got to be mindful of, right? So at 79 basis points, well, it's a bit more than 79 because we're at 8. Yeah, it's fine. Sorry, ignore me. I'm waffling. Okay, so now we have to just sit and be patient. But our liquidation was what was this? 16.7. 16. Oh, sorry guys, I wasn't paying attention at all. Let me just do that again. Yeah, only because I want to mark it out. Oh, I'm committed. I'm doing cross. I'm committed to the trade because I like the plan. I think if it's going to happen, we're going to be yeah, basically I'm going to do DCA as cross margin. So 16,895. I'm going to do a 25% order. That will be 0.33. I'm going to open a short. Okay. Now, my estimated liquidation price on this is 17. Why is that so high at 100x? Oh, it's because I've got 4 positions available to me, right? That's why. Yeah, my equity is still there. My total buying power is 62k on a short. Yeah. If I change that to isolated, it's the same. So it's 85. Yeah, it's fine. Okay, sorry, I was getting confused. I was concerned that it was not trying to utilize my margin from multiple sub accounts, but that's the unified account, which I don't like what it does. Anyway, okay, so let's open a short. So liquidated at 17,557. Okay, here we go. So now we just be patient, and now I'm just going to change my view so you guys can see the analysis part. All right. And then in terms of management, well, you just do you take a stop loss or do you just manage it down from structure? So sorry, rather than stop loss, do I have a take profit zone, or do we just manage it based on structure? Well, I would suggest structure is the way to do it. So what do I mean by that? That would be, right now we have a higher high. Let's say this prints a new, lower high, just comes and, tags our area, which is about here, and then starts to come down. Well, where's our brush through? So what we'd expect to see is we come up, we get filled here, and then we start to come back down, and then we start to generate new higher highs and new higher lows. Well, what I would do, my stop loss would then be, each time above a new structure, so that rather than take profit, it would be a stop loss, which would take my profit. So now we wait. and we just see how it goes. I mean, ultimately, however you want to look at things, I mean, there's a huge where are we on this? This is the height that we've got to, right? But I'm just while waiting for stuff to kick in. You know, we've had this idea of this ABC correction from the original 5 Elliott waves, and you know, we originally was like, well, it was A, B, and then we thought this was C. The problem is now, because this hadn't played out, the way we wanted it to, it's like, well, now you've got to reassess. So now the way I would look at it is now, okay, well, that's fine. Now this is B, and this will somewhere become C. Now what we want is we need to break this structure, which is currently at the 1705 17,054 or something like that. That's the previous high. So it's like, well, where would we expect and anticipate? Can I recap your thought process for your decisions? Yes. So okay. Basically, I've got an order placed at 16,895. This is where liquidities are at its highest. The reason this is also at its highest is we've got, if you take, I'm just going to go back to the 15 minute. If you take this move and I go from high to the low, well, you can see that this is that 900. This is that line here. So this is where all the orders are on Bookmap. I can see we've got, you know, nearly 700 BTC to be sold. So passive orders currently in the order book. However, what we've also got as confluence is the golden pocket in this same area here, and we've also got you know, this is why essentially where I've got my order. So I've decided that I'm just going to come slightly less, because we may not get filled here because there's a lot of orders, so to speak. So the idea would be for me to come in, try and get filled. Now it might wick higher, so what I'm also going to do is to pick up this fair value gap here. So fair value gaps are normally created via the trading algorithms. When you get these big speedy moves to the downside, the machine of the trading algorithms likes to come back and fill these gaps. So that gap is currently at 16,913. So that's the average. So my next order entry will be at 16,913. You can't see this off screen, unfortunately, but I will add that in. Open a short. Okay. Brings my liquidation level down. That's fine. I've now got my second entry order in at my fair value gap. And then you've got this huge order block here. Okay. Which you can see provided a really difficult area. Now, I could put my third entry at 16,943, which is right at the bottom of the order block. I could decide to just pick up the 786. Sometimes we can just wick that, sometimes we might just be below it. However, I'd feel a bit more confident if we covered the order block area, which I think I'm probably going to cover. So that's 16,944. So I'm just going to add that one in. Well, by the way, the options are, or the decisions are, if you think of the order block, this is where we start the order block, this is where we end the order block, and this is the average of that order block, which is 16,964. So we've got enough leverage to get us up to there without being liquidated. So I'm going to pick that area as the average. And this is all subjective. No one really knows where it's going to go to. But if I look at confluence, 16,963, 16,970. There's a little bit more liquidity at 16,970. 16,970 would be here. It's a little bit more liquidity. Sounds like a sensible idea. You know, would we rather go there or or here. I mean, 16,950 again. Sometimes with these whole and half numbers, you just get people putting in orders just because they're a nice round number rather than anything articulate around TA. So we'll go with the average, which is about 16,963, 16,964. So I'll say 16,9. That's dropped a little bit there. This is the thing with the live order flow. You see it coming in and out, coming out. I'll just stick to the average. Average is 16,963. So just so you guys can see live what's going on, I'll just show you 16,963. Now you've got to be really tight with your orders because, as you know, we're using 100x leverage. Now I've only got $124 left. Open a short. Brings our liquidation level down again. But what this actually means, don't forget, is the average of these. If I was using isolated, and here's the difference. If I use isolated, right, and let's say the price does this, fill number 1, fill number 2, comes up here to this point, and then I get liquidated on this point. Maybe it don't get liquidated on that, I don't know. And then let's say I've got my 4th entry at the top of the order block or at the 1-to-1. I can't see it going that high if I'm completely honest, but let's just put it in anyway because it's it'll be the order we'd want to go to. Actually, the average is now 16,966. So let me just change this real quick. 16,966. Enough. Let me put the next one in at the top of the order block, just below, which is 16,986. 16,986. And then we're committed. Not enough margin. Okay, well we'll just do 100%, and it's just shy of that. That's because of fees. Okay. Again, 17,081. Right. So there's our entries. So as I say, with isolated margin, what would happen is almost certainly, the move from here to here would probably at least maybe liquidate one of them positions. So I would be liquidated on this position and not this position. However, you might say, well, actually, that's not really a big problem because at least I've still got 3 positions open. I'd grant you that for sure. The only problem is with the 4 positions, my average liquidation level might be somewhere up here, 17k, maybe over. So it's like, well, I'd rather, if I'm already on the account for saying, well, I'm happy to trade with $250 and that's my limit, then I would rather trade for that reason rather than getting liquidated on 1 or 2 positions, because straight away my account is halved if 1 or 2 of them get liquidated, so to speak. So that's the idea. You can see the margin that the value is being added back into this 16,900 area. So it's a very strong area, which we might be interesting to see how it comes up. Isolated has always averaged my position on Bybit. Yeah, but not your liquidation level. In fact, if I have isolated, I would have 4 positions here on Bybit. You can't. I don't know what you're looking at actually. Let me just double check what you're looking at. Yeah, I would have 4 separate positions here in isolated margin rather than averaged. At least I think, by the way. I'm not entirely sure. I've never added multiple isolated positions, so my assumption is that I've always used cross margin because I like the average of the liquidation level as well as the average order. I just don't think in isolated. I think isolated provides you multiple orders, and each order constitutes its own level, its own average, its own its own liquidation level, and its own entry level, and what will be. You tell me if I'm wrong on that, by the way, because I don't know if that is the case or not. But my assumption is that it treats each order as its own individual order. So we're seeing some push to the upside now. I'm hoping that, you know, we go for the push here. But as I was trying to do before, so before Mr. Nene or Mrs. Nene, I just wanted to show another kind of key level. I'm just going to get rid of that a second. What are we on? 4 hour. Yeah. So you can see where we put this this ABC concept here. So you could say, well, how would you figure out where to put C? Well, normally you take your swing low to your swing high, and then come back down to your next swing low to figure out where your 1-to-1 is, and that's usually a really interesting area. So we can take our Fibonacci extension. We can go from our swing low to our swing high, and then back down to our swing here. And you see the 1-to-1 here is right at that 17,209 area. So that could be, let me just make sure let me just do that again. So I just want to make sure I'm spot on. We take our low to our high, back to our low. So the 1-to-1 is right at 17,203. So if we push up, that's where I would anticipate your C would be to finish off. Oh fuck, sorry guys, my bad. Thank you for that, Nene. Let me just switch. This is why I don't like doing these lives. I'm not very efficient. Okay, back to here. So as I say, right, you want to take, you know, we're not too bothered about this area up here. That was just part and parcel. Is that just to confirm if I switched? Can you guys confirm if you can see the switch now? Am I back? Can you see the analysis? Might be slightly delayed on my picture. Oh, perfect. Okay, so yeah, so we're not too focused on this FTX piece. It's really, you know, our ABC, trying to figure out where the ABC will play out. So after the 5 wave, you normally have an ABC correction. Sometimes it can go into a WXY, which can be like a double version, and there's different ideas around how, you know, what wave can be more, you know, motive than a previous wave. So I'm not going to get into all of that right now because it gets really complex, but there is stats and data that you can figure out and review to show you what levels or what, you know, corrections and motive waves are more important than others. But typically on an ABC, you normally have your C wave finishing above your A wave effectively. So, you know, what we're trying to anticipate is, well, where would we anticipate the C wave to go to? Normally, you know, a good way to do that is to look at your extension tool. So you can go from your kind of high here, which is your high point, to your low point, and you can see your 1-to-1 fits perfectly at this 17,206 mark. I've had that marked out on the server for some time as an important point. So where are we now? We're just starting to approach our potential area of fulfillment. So let's see what happens. I'm just going to remove this off the chart, and we're just going to zoom back in real quick. We'll go to the 15-minute. Now we need to be on our game. Okay, so let's see. We are at 16,895 for the fill. Now remember, we're using an 100x, so that's about $2.50. Well, if we got all positions filled, it would be about $2.50 per basis point move. So that's what you'd be anticipating in terms of a return. We are starting to see a slight change in the trend strength, starting to move up. But what you've got to remember with these things like this Lux algo and all that kind of stuff, I thought sometimes it can't replicate instincts in terms of trading and seeing how things move, because really it's about structure. The important thing and traders' mindset is always around structure, understanding, have we broken structure, have we got a higher high, a lower high, or, a lower low, and these are the things that I think are more important. Now this may, sometimes you just have a plan, and by the way, the plan doesn't work out, and if that's the case, worst case scenario is we've blew up $250, and that's not what we want to do. Of course, it's not what we want to do, but it's a way in which we can manage things. So let's see our trade. We want this to be at 16,895. So this would be our fill level here, which we're open to see. We're coming quite close to it now with a little bit of a push. We've got a little bit more momentum to go on the MFI. What we'll start to see once this fills, and then our second fill is at 16,913. So I'll just add that one on, 16,913. 16,913. Fourth is at 16,965.5. Just add that on, 16,965. Sorry. Now always remember, guys, right? Trading, we need the price to come to us, not the other way around, ever, right? The moment you start chasing price and FOMOing in, and you're not patient, and you don't, add any kind of what's the word I'm after? You start being impulsive and you're trying to force things. It's not a good thing to do. And for me, I would rather not take a trade or lose out on a trade because it was too precise with me entry versus trying to catch a falling knife. That is just the worst thing to do, and realistically, you're gonna get wrecked. So for me, you've got to be patient, and it's sometimes boring, specifically if you're trying to record. Specifically, if you're trying to record a session that you're hoping will be, will be worth watching, let's just say. But still, there's stuff to learn. We can see what's going on. Question from Gainesville. Hi, mate. You say you use a different exchange to keep your spot safe, but if you put money into the future wallet, why would the spot wallet be at risk, mate? No, what I'm saying here is, if I'm, let's say I haven't got a sub account, right, and I've got a futures, just one futures account. Now I might be reckless in a trade where I think it's going to change. It's going to change. The direction's coming. I'm going to keep going. Now let's say I've got $10,000, $20,000, $50,000 in an account, but I want to use just $250 as isolated and whatever else, or cross margin or whatever it would be. There's always that little devil in your head where you think you're better than the market, whereby you are going to keep trading irrespective of your loss. And then you're thinking, to take FTX as an example, it's exactly what them clowns did. They just kept on, throwing more and more funds in, and that's what went wrong. The reason I'm suggesting putting my funds into an alternative account, it's still the futures account, it's still a futures wallet in the futures account, but it's a sub account, and that sub account is protected by the circle of that sub account, which means whatever fees, like that $250 in that sub account, is the total amount that I can be liquidated on. So if I get a little bit hot headed and reckless and think I'm just gonna, trade's gone, trade's been liquidated and it's gone, and then it is what it is. That's I'm happy with that. I can mentally deal with that. What I can't deal with is if I'm in a futures account what's got more money in, and I'm trading on isolated or cross or whatever. It's easy to get capital straight away to try and think you're better than a market, and that's what I don't want to be doing. So That's why I'm saying, for me, a good safety net, even if it's enough to make you think, wow, I've just lost $250, it's enough to kind of deter you from having to go back in, transfer more money out and put it in. It's like an extra deterrent from, trying to be too cute. Now look, we can see, we're starting to see some real liquidity building up at this 880. So what I'm going to do is that's going to be my new entry level, right? Because we are starting to break down a little bit, and this is the power, I think, of having Bookmap, because you can see live where that liquidity is. It's only $20, 20 basis points lower, but I can cool, get yours so the spot is safe, but just to make sure you don't do anything silly. Yeah, exactly right. You don't do anything silly to yourself. You know what I mean? We all have those kind of tendencies where things can just get a little bit out of hand. It doesn't matter how good of a trader you are. When the markets want to move, the markets will move. So it's like just protecting and having funds in a different area that gives you that little contemplation time just to rethink. Not all plans go to fruition. You just realistically, you need to be right at least 50% of the time, or the 50% of the time that you're right, you need to have more profitable wins than losses. And there's loads of cool things you can do, in a trade. If trade starts to go the opposite way, you can hedge, where you can, lock in a profit. Let's say, as an example, I want to. How do we illustrate this? Let me try to. In fact, let me just put a new chart on. Template, and let's clear everything. Right. So on a vanilla chart like this, let's say in 15 minutes, and let's say for whatever reason, I'm going to create a zone here. Oh, get Magnus tool off. This is a zone. In general, this is a zone. And just because it's getting a bit messy, let's say this is a zone here, somewhere like that, right? Just because we've got a little bit of consolidation and stuff like that around there. So let's say we've got these zones. Would you say you are in profit from trading? Yeah. If you're not silly. I mean, look, I trade more like swing trading, and with DCA, which means, again, what you're looking at on a on a day trading here, with more capital and less risk, gives you a lot more room to breathe. There's obviously many different ways to skin a cat on trading. I don't specifically trade risky, if I'm honest. I like to kind of build wealth. And well, if you come into the server, if you're not already, I don't know, Gainesville, I don't know if you're already part of our server or not. Maybe you can just let me know if you're not. But those who are in the server know how we generally trade, and if you haven't been cavalier and done your own thing, you'll notice that generally on the swing trades we are in decent profit. So no, I would say, would you say you are in profit from trading? Yes, I would say I am. Swing trade? No, sorry. So swing trade means longer term time frame. So not day trading within, in and out. No, no. So swing trading is, I can still use derivatives or futures and leverage at 10x and stuff like that. I wouldn't recommend going above 10x, but still, I would, my swing trades are usually 10x. But I will DCA into positions, because that's the way we like to kind of do it. So let's say, as an example, right? These are your zones, yeah. So you've got a buy zone here. Sorry, a buy zone and a sell zone here. So let's say price comes up to here. your price comes up, you've got an entry there. So price starts to come up, you get filled, great, that's your fill. And then the price starts to come up here, right? So straight away now, let me just delete that. Delete, delete, delete. I'm just going to add one more zone just because I think it'll be illustrative better. Let's say we've got one more zone here, right? So let's say your idea is that you think the markets are going to go down, and this is always about context, but you think it's going to come up for a bit first, right? So you could say, well, as price comes up here, you've got an order. We'll make that red. You've got one order here. And then you've got another order, say here. So what you can say is, okay, well, right now the price has come up, and I've got my first fill because the price has came up there. Now you will be in profit if price starts to come down there, obviously. But if price starts to come up against you, then you're now going to be in the red because this is your entry. So as you come up to here, you've got a decision to make, right? Your decision is two ways, actually. Number one, do I decide to get out of this trade? That's the first one. Take the stop loss. That's what most people do. But remember, it's approaching another sell zone, right? Another zone of pivot where it can pivot. So you're thinking, okay, well, what are my options? You've got three options. Option number one is you sell. You get out of the trade. You accept the loss. Job's done. Option number two is you double down because you still think the trend is going to come against you. And then as you put your order in there, you've got an order in here. If they're equal, let's say you've got 10x and 10% in terms of your account allocation, and the same here, well, your entry price is now here. So you only need price to come down to this point before you're break even. And then if it comes down again, you're now in profit. That's option two. Option three is to hedge. And what hedge allows you to do is, if you're wrong, you can still get out of you can still come out away from it. So, but you've got to understand how you're doing it, and you've got to understand the context of how things are moving. So you move to this price here, and you get your order filled, and then you come up here, and so you might this might be a stop loss. Instead of it being a stop loss, it becomes a buy order of equal amount to this original order here. So let's say you were one Bitcoin, one BTC at this order as a sell, so you open, the price goes down, but at this level here, you do another one BTC as a buy order. So now what you've effectively done is you've locked in this area. I know this probably looks a little a little bit odd. Let me just change the colors so things are sorry, a little bit. So this area now is locked in, right? So thinking about it logically, if the price continues to go up, well, you're going to make on this, but you're going to lose on this. But the price stays the same because you've locked in that loss, so to speak. So thinking about it logically, right? Remember the context is important. So if you think if the price is going to continue to go up here, you may be, $100 in profit from this long order because the prices continue to go up. This is going to be in, let's say, $200 of loss because let's say it's just for nice easy numbers, it's equally apportioned. So you can take your profit here, right? You can say, okay, well, I think we're going to spin back down at this point. So remember, from the long, you're in $100 profit because you longed at this point, but you shorted here. Now the price is going to stay equal each of the way up. So when you come to this point here, you take that $100 profit as a long order, and then the price, and at this point you enter a short. Okay, gets a little bit complex, but you enter a short here. So now you've just made $100 profit, remember, on the way up because you hedged. So now where your original short order is here, you've got a short, you've got a short here and a short here. Just move that. Short order here now. Short order here. You've made $100 profit from the long, but you've got out of that profit, and now you've entered the short. The reason you've entered the short here is because this is the pivot point that you've got a lot of confluence. You've got a lot of areas where you realize or you think that the price is going to go against you. You entered a short, whether it's a 2-to-1 short from your original one or whether it's just a 1-to-1 short. You now have your short entry average. That would be, let's just say, here, or in the middle of there and there. What that means is your original hedged position, which was here, if you'd let that continue to go up to the top side, well, you would have been in like $400 loss or whatever it would be. But because you've hedged, the price has gone against you again, but it's fine because you've already made $100 on the long. You've then added another short in because you knew that the price, or you not knew, that's not a fair thing to say, but you had an idea that the price was going to go against you, has now come back down. You've now only got, what was a crazy loss because the price has gone mad is now become a nice trade in the end. So using this kind of idea, there's a couple of different ways you can manage trades, and this is one that is more difficult to manage because you still got to manage the trade, but it takes the pressure off, because if you hedge long, if you're hedging, the opposite way, the comfort factor is you've locked in that loss no matter what. Now, if the price goes up, down, left, right, inverted, whatever, the loss stays the same, either way, because it's an equal and opposing order to the opposite side. So then it gives you a bit more time to then focus on where structure can start to build and how you can start to kind of tease your way out of that loss, if that makes sense. So thank you very much. Do you trade full-time job? Not quite, not far off, but not quite. TP at the next order block below. Yep, you could take profit at that next order block below. Quite could be a nice place to take that. So you short, then you went to bed, then you long, get in profit, then short at the pivot point, more profit. You short, sorry, nay, I don't get that. So you short, and then you've gone to bed. When you long, then you long, get in profit. Now I think these you've got to manage. You've got to. I mean, if we're talking about hedging, you've got to manage it. Obviously, I mean, you can lock in profit. The only time you really want to hedge is if it's going sideways. The trade is going against you, and you're really starting to panic. But remember, you need to have the margin to match your initial order. So if you've gone crazy with leverage and 50x and whatever else, and you don't have that margin, then that's gonna give you a problem. Any coins I like to trade? Yes, I like to trade Atom. I don't know what it is about Atom. I feel like we've got a bit of a love affair. I've made a bit of profit on Atom, which was quite nice. Litecoin as well is one we've traded a little bit of, which I think is a nice coin, but it again caught us out a little bit because it's going through its halving soon, so it kind of has a bit of a mind of its own. Some of the team like to trade Sol. Matic seems to be one that I think is a tradable coin, but not one that I've pretty much traded with. I typically trade with BTC exclusively, but I will entertain some other coins. But Atom's a good one. So we've got the VWAP here, volume weighted average price. We could see a bounce here. Now here's one for us. Do we place a long? Do we change our narrative and go long at this stage? Is the question. What's down here? 16,757 is the order block. 16,757, so it's around here now. Would I use leverage if we got a bull run? Absolutely, I would. I don't think leverage is a bad thing if you use it correctly and you understand what you're doing with leverage. Now, here's a little test for those guys here, right? We're approaching the VWAP here. Do we bounce off the VWAP, which is 16,810, and then continue to the upside, or So we blast right through it, and this was nothing more than that correction that we identified. And you can see that's it looks and feels very corrective. I mean, an argument would be, why didn't you just go for the 0.5? That would have been, an absolutely lovely entry level there from your swing high to your swing low. And this might be, further downwards momentum, which for me, I don't care, because we've got a long-term play for shorts on BTC. So that's not a bad thing anyway. It's just for a day trade, perhaps, favored safety, thinking that we might come up here because that's where the liquidity was. It's still there, by the way. The liquidity's still there, but the 0.5 seems to be right where we sprang and bounced from, as you can see there. Have you seen Leverify that keeps doing some big pumps 100%, then the dumps within the hour? I don't know too much about that, but that's why I don't like these community-based tokens, because it's all news related. You know what I mean? And TA goes out the window more often than not. Yes, they tend to follow Bitcoin in general, but like Litecoin, has a mind of its own. Atom can sometimes do a complete opposite to what Bitcoin's doing. So you've got to be careful. I mean, ETH, solid to trade. Bitcoin, solid to trade. Even Sol, I mean, Jesus Christ, Sol just went on an absolute tear. It just broke all the rules the other day, and it was just absolutely, flying. So again, what I like about Bitcoin is it's not a community token. It's just a token that anyone can trade, and it's not based on news. In fact, Bitcoin follows the grander economic scale than the likes of any kind of altcoin. So that would be my take on it. You've just got to be careful and accept the risks. But this is turning into a bit of a boring exercise. I was hoping that we'd get some fills, but equally, I don't want to come on here and show people how I trade and just get into a trade for the sake of getting into a trade, because that's also not a good idea. But I'm looking at the structure right now, and I'm thinking, okay, well, we've come up at this high here. We've retraced 50%, which is usually what you want to see to kind of tick that retracement box before a next leg to the downside. No, I was wondering if it was like an inverted Elliott wave, but it's not. It's just chop. So we see, what have we been on? We've been on just over an hour. I did want to get over the issue of the Brink session and that first. I wanted all the news to come out the way and filter through, because there was some crazy flip-flopping earlier on. I mean, as I say, the Fed have got just major problems. Nothing seems to be setting in. Unemployment change, more jobs was actually created, and what was the other one? The other one was unemployment claims reduced. I mean, less people claiming benefits. That is just crazy. But we're still hovering above this 16,800. It's like, what? I don't know if it's almost like, okay, right, we've accepted now that we're going to be accepting rate hikes, and it is what it is. So it's already been priced in. These kind of rate hikes have been priced in, because these are not really big moves, but they are significant in the narrative of what's being played out in the economic state. It's like, are we in a recession? Are we not? Anyway, so if you do a risky alt, you could maybe use isolated with a high leverage, but say only but a very small amount. And if it does a big pump, could do well. And if it dumps, yeah, exactly right. You may think, oh, the connotations with using leverage is a bad thing, but actually it's not. If you use isolated margin and use really, really, really high leverage, like 100x leverage, but you're happy that, okay, look, I've come here with $500. I'm going to do 5 single isolated margin calls. Each one of them will be $100 at 100x on an altcoin. But I think the altcoin, could go to the moon. And just remember though, your altcoins, because liquidity is relatively low on them, your margin creep, or the point at which you get liquidated, can sometimes almost happen instantaneously. So again, just be careful. If you're going to pick altcoins, I'd try and maybe pick a coin that's at least got some level of liquidity behind it. It's a correction, not a recession. It's definitely right. Everywhere else we've accepted it. Europe's accepted it. Just the States, they always like to do things differently, don't they? But yeah, I know what you mean. It's it's a correction, not a recession. I like that. Okay, so we're just lollygagging right now, guys, aren't we? But this, I mean, these are good sessions. I think. I mean, I don't know if I want to keep doing this, or if there's any value in doing these or not. Let me know if you think these are worthwhile doing. Then I'll continue to do them. Maybe a couple of times a week. Realistically, we'll probably get a lot more sessions where we get calls, as in getting an order placed. Just this has been a little bit kind of consolidated. If you say like $20 on 100x, what would the fee be if I kept the trade open for 2 to 3 weeks? It's a really good question. You'd have to go into your account, your Bybit or whatever account that would be. I mean, the trade itself would only come in. You'd only pay the fee once the trade opens up, though. Yeah, so you wouldn't pay the fee unless the trade was actually open and you were trading it. If it was just sitting in your account waiting to be filled, you wouldn't pay any fees on that. And also remember as well the funding fee, which is shorts paying longs and longs paying shorts. What is that? That's really about being pegged to spot. So because futures is essentially a different instrument, if the price of the futures BTC is out from the spot, well, the funding rate is an incentive. That's the word. It's an incentive for the market to short or long to get closer to spot. It's always trying to peg to spot. So that funding rate may favor shorts, it may favor longs. So it just depends purely upon where we are in relative to spot. So the funding rate can be your friend, but also remember there's also rates that you pay for the benefit of borrowing money, because leverage is effectively borrowing capital. So it's not, funding rate is a different thing than, sorry, your fees that you pay for getting the benefit of borrowing money is different from the funding rate. So yeah, we're just stuck in this kind of lollygag scenario where it's a little bit lackluster right now. But again, this is about patience, really, nothing more. But I really like, when you have the proper setup and the proper tools, it's trading is about getting as many things on your side as possible, so. And again, you need to always have a plan. What is the plan? The plan is, right, I think we might come up and get this liquidity, and then we're going to come back down. Why? Well, you can look at I'm just like winging things here, but you can look at the MFI. The MFI is going to start to get overbought on the 15-minute. Realistically, we're kind of day trading, so we want to be in and out of a trade. We can see we've got, Bitcoin building as limit orders here. So if aggressors come into the market and start to push the price up, we can see here we may get absorption. Therefore, that's a good place to get an entry before we start to move back down again. This would fill this correction nicely. We'd fill into that golden pocket area, and then we come back down. Now that's just a plan, right? But the plan that might be, actually, no, we're now changing direction and we want to go up. But when you've got a plan, at least you've got a plan. What you don't just want to do is the person who goes, I'm just going to dive in here. I'm just going to you know, this is where I want to dive in, and no rhyme or reason. I'm going to try and snipe in and snipe out. You've got to have some sort of a plan together. And for me, it's always counter trend. Always looking for areas where we can get a strong pivot point. Right now, there isn't any clear order blocks, although I would say absolutely that this is a strong sell area, an area where you can expect a strong amount of sales to come in. So obviously we're averaged in here. I think we've got, what's the I just want 16,965, so that's 16,965, actually 0.5. I never shorted, so I'll know. And then the top one is 19,686. 19, 16, 986. So there's my 4 entries there. This is a very strong area of, I think, rejection if it does come up to here. But you could see our average entry will be about here, 16,940. If all 4 positions got filled, which would mean for us the price would only have to, if it does come up to these levels, gets a strong rejection here, then we only have to get past here to be back in profit. So that's why I think the DCA method is specifically if you're going to use cross margin is a solid way to go, because almost guaranteed if I only fill this, if I fill all positions, then realistically I'm probably going to at least get liquidated on this one here. And the other good thing we've got in our favour is we're starting to move up on the stochastic, and we're also starting to move up on the MFI. So there's every reason to think that these positions are still sound, still good positions to have in the chart, and a way for us to kind of get it. So where would we look at taking profit if we came back up? So I'd be looking if we came and filled here, right? So you're gonna go there. You'd be looking either your kind of 0.5 or your 618 kind of golden pocket area, just as a snipe in and snipe out. if you got to this position, obviously it doesn't matter where your average is, it's where the price rejects from. What you want to do is really, where does the price come back down from? So if we assume that it comes back to the 1-to-1, then that would be a nice area. Maybe the golden pocket area would be another interesting area as well. Or maybe you just take this order block here on the 15-minute, as would be a nice area to be able to get a potential a take profit zone. So whether you go with the average or the bottom to close it, this has been a difficult area to break. I'd probably go the average. So your take profit would be 16,576. So let's say we've done the average. So if this is the average here, I'll just colour that different colour just for what's the text am I doing? Let's make it purple. Okay. So if we wanted to look at what our TP would be, we're looking at 184 points, right? Now, if all positions got filled, 184 points, right? So that would be 184 times, what did I say? It was $2.50 per point, roughly. So that would be the potential profit. Oh, I haven't got a calculator here. So just do it. So if we were looking at profit, it'd be 184 times $2.50. It'd be $460 as a trade, which would be nice. It'd be a nice return on investment for a few hours work. Well, that's right. That's what you're going for. That's if it came in. But a lot of the time, you don't plan for the loss, do you? You map out your plan that you think is going to win. But it's getting a little bit static and a little bit slow right now, and I don't know how much longer I want to be on this session for, to be honest, and wait. What I'm probably going to do though is leave the orders in play, wait for at least my first fill, and then just keep checking it, because I think it's a sound enough plan. It's only a day trade, but I think it's worth the return on investment. Guys, is there any more questions before I close this one off? It's a shame we didn't get in a trade, because at least we can talk and manage it as it's going. Realistically, not every day is going to be a traded day. If the opportunity doesn't present itself, then you just don't take the trade. It's as simple as that. You don't rush into trades. But we have got the New York market open for still a good few hours yet, so there's no rush. I want to see how we respect the VWAP and then come back down. But I'm guessing if there's no questions here, I will call this one a day, and then we'll pick up a new session tomorrow and see if we can get some trades there. Right now, I'm going to leave this in play anyway, and I'll just I'll continue to give you guys a shout, and we'll monitor it in the server. If you're not in the server, make sure you get yourselves over. I think link should be in the description. If not, if Moonrise or anyone in the team is still there, maybe just if you can just put an invite into the server for anyone who wants to join. And hopefully you've had you've got a little bit out of this today, and we'll jump on to the next one tomorrow. So peace out, have a lovely day, and I shall speak to you guys tomorrow. Thank you very much. Bye bye.